Good morning, everyone. This is Sakis Paraskevov, fundamental analyst at IronFX Global, bringing you the morning comment for the 5th of November. Fed Chair Yellen said that December rate hike is still a live possibility. She said in her testimony before the House Financial Service Committee that if the upcoming US data support further improvement in the labor market and the return of inflation to the 2% target, the December rate hike would be a live possibility. Even though the tone of the speech was similar to the FOMC October meeting statement, this was Yellen's first direct communication with the market. The fact that she supported the case of a liftoff bolstered expectations for higher interest rates and strengthened the greenback across the board. Investors raised their expectations of a December rate hike to around 60% from near 35% before the October FOMC meeting. In addition to Chair Yellen, New York Fed President William Dudley said later on Wednesday that he would completely agree with Yellen that December is live possibility, but the decision will depend on the data. We maintain our focus on the October employment report, the minutes of the FOMC October meeting, and on any Fed speakers going into the December meeting for more insights about officials' view over the outlook of the US economy. It has become very clear that the decision whether to start normalization this year is data-driven. Therefore, positive US data surprises are now required for the market to reprice expectations and USD to gain further. The highlight of the day will be the Bank of England monetary policy meeting. This is the second Super Thursday, as the bank simultaneously releases its meeting decision, the meeting minutes, and the quarterly inflation report. The consensus is for the vote to remain once again 8-1, with Ian McCafferty to maintain his call for rate rise. Market participants will be eager to see if McCafferty is joined by the formerly hawkish Martin Wheeler or Christine Forbes, who argued that the underlying inflation should start to pick up soon and that monetary policy would need to be tightened sooner. In the inflation report, bank officials could lower their near-term GDP growth and CPI forecasts given the lower than expected preliminary GDP for quarter 3 and near zero inflation for most of this year. As a result, the impact on GDP will highly depend on the extent of the revision and on the tone of the meeting minutes. Besides the Bank of England, the Norges Bank decides on its interest rates as well. Norway's neighbors are once again in an easy mood, putting pressure on Norges Bank to follow suit. However, since the September rate cut was justified as a precautionary move, we believe that the bank will refrain from acting now as it sees to be one step ahead. What is more, the Norwegian krone has declined more than the bank forecasted in September, which supports our view for no action at this meeting. As for the indicators, Germany's factory orders fell unexpectedly in September, extending the previous month's shrinkage. The forecast was for a 1% month-over-month increase, a turnaround from minus 1.8% month-over-month in August. The drop in September highlighted increasing risk of slowdown in Eurozone's largest economy and weighed on the common currency. Eurozone's retail sales, a closely watched measure of household confidence, are expected to have increased modestly in September. However, Germany's sales stagnated in the same month, providing evidence that consumer sentiment in the bloc's top economy is starting to wane. This increases the possibilities for a disappointment in the Eurozone's figure as well. Sweden's industrial production for September is also to be released. In the US, initial jobless claims for the week ended on October 26 are expected to come at 262,000 from 260 in the previous week. This would leave the 4-week moving average unchanged at 259,000. The preliminary unit labor cost index for quarter 3 is coming out as well, and expectations are for the index to have risen after falling the previous quarter. Usually, the market pays little attention to this indicator, but we will watch it closely due to the Fed emphasis on the employment data moving into the December FOMC meeting, and especially one day ahead of the US employment report. As for the speakers, besides Bank of England Governor Carney press conference, ECB President Mario Draghi gives another speech, while Fed Vice Chair Stanley Fischer and New York Fed President William Dudley speak at a workshop. Philadelphia Fed President Patrick Harker, Chicago Fed President Charles Evans, Atlanta Fed President Dennis Lockhart, and Fed Board Governor Daniel Tarullo also speak during the day. Fed speakers have to continue to communicate that they are likely to raise rates to avoid surprising the markets. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, fundamental analyst at IronFX Global, wishing you solid trading.